Hello, Jim here. I've been an investor for many, many years. Started investing back in the early 80s, and I've been through lots of corrections and rough times. I believe there's a lot of bad advice going out on YouTube and probably other areas, especially from influencers. This is a time to kind of be safe. Don't take crazy risks. And then I've heard influencers talking about that they can make hundreds of dollars on a daily basis or thousands of dollars on a daily basis trading in one particular stock. Now, I'm going to talk about two that I think currently are very, very risky. They're at PEs that are so high that when there is a correction or even a small correction in the market, they could come tumbling down. I want to talk about that. I also want to talk about how it currently looks a lot like the dot-com bubble. I was working during the dot-com bubble. I remember it vividly. So I'm also going to talk about that experience and what it might mean for your investments and your current open contracts, what will happen, what it will look like. So stay tuned. I think this is a very important issue to discuss, and I think you're going to get a lot out of it. So thanks for joining me. Let's go ahead and jump right in. Okay, let's go ahead and jump right in. So the first thing I want to talk about is I want to give everyone a reminder of what the dot-com bubble was like and how, in a lot of ways, what we're seeing right now with AI is very similar. But by going over just a quick 5-minute review of it, it'll kind of give you a better perspective. So it was also known as the internet bubble. It was a period of excessive speculation in the late 1990s and early 2000, characterized by rapid rise and subsequent crash of internet-related stocks. So here's a quick interview, and just to give you a little bit of perspective, I actually was working for a startup company at the time that the dot-com bubble occurred. I remember working with other developers and all the FOMO, fear of missing out. People were investing in these companies and having these crazy expectations that you could get, 200% return in a matter of a couple of months. And I remember feeling the FOMO, and I did make some investments, but not many. I was still a value investor, not still. That's about the time I first got into being a value investor. So I owned a lot of value companies. I owned a lot of utilities. I owned Coca-Cola. I owned Procter and Gamble, a lot of the big name companies. But I was really felt like I was missing out. That wow, I should own some of these other companies that are growing so quickly. And being that I was working so much, I didn't have a chance really to make these purchases. So I was really feeling FOMO. Now the interesting part was the fact that a lot of the other developers had made the purchases. So I remember when the market crashed and continued to crash, that they had huge losses. They got in at very high PEs, at values that were, some of these companies weren't making money or they were making a little bit of money and were just hammered. And I had Coca-Cola, I had the big names, and there was like a flight to quality. So a lot of the names I had did okay and actually recovered quickly or actually went up. I believe Coca-Cola might have gone up at times during the crash, and same thing with Procter and Gamble and some of the utilities. So that's my perspective. So it had rapid growth, 95 to 2000, huge media hype, huge IPO frenzy, lots of speculation. Then in 2000, the NASDAQ Composite Index was 5,048. And it was literally, I believe, 2002 that the bubble burst. It dropped significantly, 78%. So just imagine if the market dropped 78% currently, and that's the average. So some companies dropped 80, 90, 100%. A lot of companies went bankrupt. It was a major bursting of the bubble, so if you think about it now with so many people owning options, what would happen with a burst like that, and I'm not saying this is going to happen, but it could, or even a modest correction, what happens is people are over leveraged in a lot of these stocks and it causes margin calls and they have to sell things they don't want to sell. And then suddenly you know, one margin call causes another, and you get like a domino effect. It continues, and more people get hit. Stocks that wouldn't necessarily be assigned away early do get assigned because of these margin calls, and it kind of feeds on itself. So suddenly, instead of having one or two, positions get assigned, you may have 50%, 70% of all your positions that you're currently in get assigned. So just to give you a for instance of what it could be like, I do believe it's important for people to keep that in mind and do a feel for their, for their positions. If we had a crash, we had a 50% crash, everything was assigned, would I have enough cash or would I have to sell quite a bit? It's a good way to kind of, it's almost like they did the type of testing they did with testing the banks after 2007. So something that you could do, and that's something I'm looking at doing. Now, the main reason for this video was I've seen a bunch of videos lately. I like to follow my competition, and I've seen some crazy suggestions, primarily with two companies, Palantir and Tesla, that you should throw everything at Palantir. You can make hundreds each day or thousands each day. And to me, that is absolutely crazy. Now, I've invested in Palantir, and I've done fairly well with them. Let's actually bring them up really quick. So let's come over here, and let's bring up Palantir. This is Seeking Alpha. I like to use Seeking Alpha. So it's shot up to 28 recently. So it's gone from, in 1 year, gone from 16. Actually, if you look at its low point, it's gone from 14 to 28, and they have literally an 86 PE, which is quite high. I personally think that this is like an $18 stock, maybe 20. And I think if we go through a correction, it could be back there. I mean, they have good earnings. They're doing well. They've got good growth, but not crazy growth. 17, almost anywhere from 18 to 20% revenue growth. Earnings growth, it's pretty good. So they are a good company. I'm not saying they're not a good company, but what I am saying is don't throw all your eggs in one basket. The only way you can make hundreds, if not thousands, in income from selling options on them is by doing lots and lots of contracts. And if we go through a crash, Palantir would be hit pretty hard. Now, would it go out of business? No, it's a very well-run company. Now, it does have lots and lots of government contracts. So some of the things that people aren't thinking about is, it's kind of a crazy time with what happened with Trump yesterday with the attempted assassination. But if Trump ends up in the office, and I do support Trump, I voted for him the last 2 times. I'm going to vote for him again. I didn't like him early on because I thought he had too much of an ego. But because of what he's been through, I do support him. But I do believe he's going to do government cutbacks. Which is going to cause probably some canceled contracts, delayed contracts. And companies like Palantir have lots and lots of contracts. So suddenly that could be impacted. A lot like Cisco, where contracts are canceled. They don't have a bunch of inventory, but they do have software products. I worked for AT&T, and when we went through recessions, we would cut back with our software licensing. We may skip a year or two and just do with what we currently have, especially with Microsoft and some. Back then when I worked for AT&T, we didn't have all these choices you have this day and age. And also civilian cancellations. If we go through a tough time, there's going to be a lot of civilians. So again, it's a good company. It has a lot of momentum. You can see here the momentum's kind of through the roof. And it has tons of options. So I'm not saying don't sell options on them, but keep in mind, I really liked them when they were in this range, the 18 to 20 range. ever since they had earnings and it shot up, it's gotten a bit pricey. I do currently have some positions, but I've done really well with them. Currently, I had purchased some calls and I had done poor man's covered calls, so it's worked out pretty well. Let's go back to the list here. The next one is Tesla. I still think EVs are kind of out of favor. I know there's a lot of hype related to robo taxis and other products. I know robots. I think they're going to be releasing robots in a couple of years, but a lot of that's been delayed. So again, just like Palantir, it's not that I dislike them. I just feel like you have to be very careful. At one point, I was very worried about them. I thought potentially they could be a $70 or $80 stock. So I panicked a couple months ago and I actually bought some protective puts, which is another thing you can do. If you own a lot of these shares like in Tesla or Palantir, one protection is to buy puts. If you think you're going to have a 20% correction or you want to protect against a 40% correction, you can buy puts pretty far outside the money, and they shouldn't be that expensive. But the farther you go out, like you might want to look at March of next year, where we get past the election, and some of this crazy political stuff will slow down. But right now, I believe Tesla is a bit too pricey. Again, don't bet everything on it. Its financials don't look as good. So if you look at earnings, it's not doing. It's doing okay. It looks like it's going to jump back up towards the end of the year. And growth isn't the greatest right now. It's actually earnings. Looks like it's condensing a little bit. Profitability, not the best profitability. Now Palantir had fairly good profitability. So you just need to be careful. You don't want to take a huge amount of risk. I'm jumping all over here. I'm trying to find my. Okay, so we talked about Palantir. We talked about Tesla. I also wanted to share with you, if you're interested, I do have a membership. I have a Patreon membership. This is the Patreon membership. I share all my trades that I make. I literally make the trade, then I post it out here, and people can set up notifications. I share my planning worksheet, which has lots of details. I also have lots of collections with really good information. I also have some areas to help you get started. I have this Learn Options in 6 Lessons that I've set up quite a while ago, and I recently updated it. And I also have this program that I'm working on with my son, which I am going to start working on this some more. But this is like starting from square one, and I plan to do more with that. So I currently have 3 memberships. The lowest membership gets you just into Palantir. The next membership gets you into where you can use Discord. This is my Discord. I have coaching rules. My most expensive membership is coaching. You get a coaching session twice a month. I also have group meetings. So I have 3 memberships. I have what's called the Investor Club, and that gets you everything with Patreon. Then I have what I call the Traders Club, which gets you the group meetings, and then also gets you access to Discord. So I have a lot of people, asking questions about the different, brokers, Fidelity. Also have a lot of trading stuff, general questions, my trades, zero DTE trades, a lot of discussions about zero DTE. So this is the $19 monthly, which again gets you these meetings. Let's see if we can go back. Yeah, so we have Traders Clubs meeting, and I make all of these available. Where are they? Over here. So I do this every other week. So I'll be doing another one a week from tonight. We get together, we discuss things. We have discussed ChatGPT and how to use it for investing. We've talked about zero DTEs, the previous, how to trade zero DTEs. So this, even the Patreon members who can get a week for free will also get this. And then with the coaching, it's a Zoom meeting. We meet 15 minutes. It usually runs into 30 minutes twice a month. I am increasing the price on this. I made it way too cheap. It's currently $25 a month. I'm going to be increasing it to $45 a month. But all the details about this will be in the description if you want to take a look. It may be worth your while. I'm trying to keep it relatively inexpensive. I want to be a place where people can go. I'm not going to dictate people need to trade one way or another. I have people who are doing zero DTEs and doing quite well with it. I have other people who are pure beginners. All they're doing is covered calls. And then I have everywhere in between. I do have some very, very advanced traders who have been sharing their trades in Discord. And I've actually taken some of the trades from different members. So there again, if it may be worth your while, I'll take a look. And then with both these interfaces, I can be reached. I can be reached through Patreon. If you come over to Mess Community, you can direct message me. I may start doing chats. And then for Discord at the top, you can message me directly by sending me a direct message. So that's the other thing. I do interact with my membership quite a bit. I answer questions and help people. And you can see it's getting pretty active. So, and like I do not plan to make it a whole lot more, to increase the prices. I'm trying to make it someplace that most people can afford. It's not overly pricey. Some of my competitors are a lot pricier. So if you have any questions, reach out. Plus, if you have any suggestions or anything you want to share related to, this whole discussion, what influencers are sharing, and then also about the dot-com bubble. I'd be curious to hear what your experiences were with the dot-com bubble. Did you live through it? Did you get hurt during the correction? So I try to answer all my comments. And as always, thanks again for joining me. I look forward to seeing you next time.